Hey fam, what's up? It's Jay. Okay, so I just wanted to discuss something briefly. I got a ton of DMs, a couple from some close friends that have been in the market for years, and a couple of them, they're losing their confidence, and statistics show that like 90% of traders fail, or they don't make it, or they give up, and we are in one of the, I think, worst markets since 1969. You guys feel free to fact check me on Google on that. But what happens if you're losing and I know a lot of people that are like, man, I really need this money. I'm gonna put my whole port in Tesla, options, and we're in an uptrend now, or Santa Claus rally is coming, and one of the things that I wanted to stress here in this video was just risk management. I wanted to talk about risk management just for 1 minute. I can't stress how important risk management is, and knowing when to take a loss. And I've learned this through my own experiences holding for too long. And there's two things that I think that you should focus on if you feel like you're losing confidence in your ability to trade. If you feel that you've lost two or three trades and you're like, man, maybe this is not for me, take a step back and set a goal for yourself. Mine was when I started 6 years ago, I said, I want to make $1,200 a month because my mortgage at that time was 1340. And I knew that if I could just make $40 a day, that could really help me, that extra money. And so I would say base hits, right? Instead of hitting a home run, try to hit a base hit and then go from there, So with that said, risk management, putting stop losses in place, knowing when to take the loss. And swing trading is fun, but in a market where the Fed is intentionally, causing pain, or interest rates are high, the narrative has not changed. You know, so without getting into the meat and potatoes of what's happening, economically and inflation and things of that nature, let's pull up a potential base hit that we could run off of. So I'll pull up Cleveland Cliffs here. I grabbed these at 1550, and they're up pretty substantially. But what I'll do is I'll actually I'll pull up the chart. I'll start off like I usually do with the 1 hour chart, and I'll look at the 1 hour chart on Cliff, and I'll see here that we bottomed out at 1393 on 1121, and then we came out of this downtrend, and we reversed. And as you can see here, my typical pattern, the 9 EMA, the yellow line crossed the 21 and the 55 for a nice breakout on that 1 hour chart. As you can see here below, we went from orange to red, some selling pressure, shorts covering, and into the momentum of the TTM squeeze shifting. We got some volume bars right here on 1123, and then the MACD is flipping up. So close to overbought. So wouldn't be surprised if it pulls back a little bit just to cool off. But I'm going to cross-reference that with the 4 hour time frame. And so with the 4 hour time frame, I see here a decent setup. So I'm looking here, and I'll just right here, just pull this nice little handle, and this setup is really nice. So I'm gonna just exit out of that image that I drew, and now I'm gonna go to a daily chart and then see if I can get some more confirmation on the daily chart. And on the daily chart, You can see I have a couple of $1,000 in here. We're waiting for this 9 to cross. We look like we have a gap up here on this hammer. And then we had a little bit of what I call the ABCD pattern. And I'll talk about that in future videos. But we got volume here. And then we have the TTM squeeze, momentum shifting. The MACD, even on the daily, is crossing into the green, which we like. And then the daily RSI is actually not that oversold, so it's an encouraging play to look at. So now we'll look at our order flow, and so the order flow here is really decent. You know, looking at the tape, we got thousands of shares being purchased. We do have some selling pressure here. I think this is more shorts covering, but you know, I think that this play, you know, if futures are, you know, participating in their green, you know, I'll look at the options. I'll look at the options history here, and like I do in other plays, I'll pull up volume statistics. I see that there's 24,000 calls to a put ratio of 9,000. And so I'll go back to the options chain. I know that today was Thanksgiving, so let me go a little bit further out. And, you know, let me go a week out and see what we got going here. So we have some open interest on the 16 calls. I like going about 10% out of the money, and I like to I mean, there's no perfect trade, but if I can buy something where I'm willing, I have a set number in my head, right? So let's say, you know, I'm feeling discouraged. We've been in a bear market, you know. I don't want to be rich, but I want to build my confidence back. I'll open up this December 2nd $16 contract, and I noticed, you know, pulling the bid, the mid price and ask on the spread. If I can get filled at 46, I think this could have a potential for a decent swing trade. So we're looking at 1590. If I grab the $16 call on the 1590, we're currently at 1590. If I grab the $16 call to swing trade into next week, I don't think that's an unreasonable trade for a $46 loss. You know, and then I can go here. There's, you know, there's limit take profit orders, there's market take profit orders with stop losses. So we can go over these things in the near future, but just kind of wanted to, you know, set the level here. Like, you know, what would I do, you know? So if I wanted to be pretty basic, you know, I'd say, look, I'm going to place a stop order, and my stop order is going to be, you know, I'm sorry, let me go to the sell side. All right, so I'm going to put a 10% stop loss. I typically go a little bit lower than 10% because the algos like to kick you out of plays. So I'll go a little bit less than, and so okay, I'm willing to lose $17 on this play, you know. So you know, I put a 10% stop loss, that's 44. I'll go down to 40, and then I'll click sell, and I'll have that stop loss in place. And as the play plays itself out, I'll go back in here, and I can, you know, raise my stop loss, or I could do a limit and take profit stop loss order if I already know, okay, I'm buying these at 40. Let's just say I'm purchasing each contract, you know, for $46, or it gets filled at 49, then I can place a, you know, limit take profit order at, you know, 60. I'm going to say, you know, at 60, I want to make $60. I want to make $20 on this play. So go in with a plan. There's, you know, the market could always work against you. There could be a catalyst. You know, they could say that steel prices are going down. and you can lose money. But if you're willing to risk $10 or $14 to make, let's say, $50 or $100, then I think that it's worth it. But just my personal opinion, not financial advice. I hope that if you found any information here helpful, that you would click the like button. But I hope this helps somebody, just to simplify things a little bit, and not overthink things. I've seen YouTubers talk about Fibonacci's and this and that, and so many different indicators, which, I don't want to take away anything from anybody else, but this is a really clean setup, 10% out of the money. I think even going in the money, just looking at these charts, they really look encouraging. I mean, really clean setups, for a stock that has been, oversold for a while. So let me know your thoughts. Do you feel discouraged? Do you feel like, you've been losing? Have you been going heavy? Do you think it would be better to maybe place just one or two trades? Say, I made 40 or $50 today. I'm gonna stop, and tomorrow's a new day. Let me know your thoughts, and I hope you found this helpful. Thank you.